Welcome to TradeTheNVI.com. This is John. This report is for the 12th of December. Well, and we continue the push forward as the green had crossed over the red and now has passed the cyan. So bullish moves continue. We have the contract prep rolling over, and you can see that mine's already moved to the March 20 on this. So it makes that little adjustment based on where the calculations were, and so you have probably corrections on all of the time charts and stuff like that you'll have to change out. But this is interesting. As we approach these highs, we're looking at just a wretched combination of the shakeout here, which kind of makes you question the stability of this move. But as long as you have the rise and shakeout continue, I would expect to see the yellow shakeout rising above. So we're getting kind of a divergence developing here, which is worth noting and paying attention. Of course, we'll see any move on the 50K in that first. In fact, we should look at the 50K while we're at it, because the Momo on the 50Ks been making the last few trades, and that puts it all-time equity highs from a periodic standpoint. Just been a stellar year. Everything has been spot on with the program, and it's going back to the beginning of 2016, so a 3-year period, and that's just an excellent return. 1.61 profit factor, not great. 43% still on that because of some of the adjustments that I'm still making with eliminating some of the more suspect trades. The same thing I'm doing on the Opus as well, as the daily Opus running through. There are certain times where it's been buying on dips, but the dips are where we have a DOC spread, and I want to eliminate. We had a couple of those, like the Iron Hawk and a few that do some of those. I'm just going to put the restriction on those, and I think that will improve those dramatically. They're already over 50% from a win rate standpoint, but that would certainly move it into the much higher range. But always worth noting that, and good to see that taking place within this setup. The last buy here was 40, and then at 44, so just happened the other day. From a NASDAQ standpoint, you see the correction needs to be done, and you can do it for all of them or per the window. I'll do them after the report because sometimes it can take a little bit of time for them to show up. But you can see that's almost got the cyan is already moved below red from a daily on the NASDAQ. And from a euro standpoint, again, we talked about this, the euro spike, we expected it to move right up to the high range of this, and it's doing exactly that. So this was no shock based on what the expectation for the EU election in Britain and the non-Brit exit. Oil had taken a little bit of a beating back and forth with large draws, but potentially facing a little bit more strain, but still up at the high end of the range, which again bodes well for U.S. growth. So it's interesting if you watch or read any of Zero Hedge and stuff like that. There's always this impending doom. It's always like just about to happen, and you can keep saying that for years and years and years and years, like they have been. And at one point, it will be true. We just have these other indicators that give us a clue as to whether or not it's immediately impending. And in this case, a little bit of a gold rise here. You know, as we get towards that end of year situation, you're always going to have a little bit more potential for volatility, and we are at record high levels. So from an intraday, let me just slide that over so we can see the date line there. So we came down, turned around, produced our DOC spreads. Didn't last very long because we had the steel cross come pretty quick. This is a little tougher one because you're not going to get a signal till later, right about here, when you had the green cross above red at the same time the steel had well, de facto crossed. It was really just a collapse of shorts. So it's one of those where that 50% line can be helpful looking at it from a Morganacci standpoint. And the rise came up there. We produced the next DOC spread. Again, not able to get past that 0 point at that stage. And that brought us down to the low levels until we started to get P2s. If you're looking at all these little weight numbers here, this is an interesting one. I've had some people talk to me about limited space on their screens. I've got a lot of real estate on my trading screens, but this is basically a tick count, and this is one of those little things that you run up against when dealing with TradeStation language. It's not hard to print the ticks on a given chart, and this is on the Fibonacci retrace. The Fib level retrace program, and basically it was just going to be a counter below the 0% Fibonacci line that would tell you where you're at on the current bar, and you can see it moving right here right now. This one right here is the current live bar, and it will just keep counting until you get to 5,000. The only problem with that is to delete the proper ones or the ones before requires a bit more language, and so that's the adjustment that I'm in. But that'll be a nice feature that I'll send out and you'll have, because it's convenient, because sometimes if you know that you're getting close to the middle end of a full bar and you have the readings going, it can give an opportunity to be ready to jump in at the right particular spot, knowing what's about to take place. So it's just an added information without having to have a separate info window open or anything like that. So it's just a convenience that makes it helpful. But I have my adjusted language that will eliminate this, and just basically we'll put it at the end of the chart. So it'll just be a set reading. But we bounced to the highs, and then had a modest, but see, every time we get the DOC spreads there with full steel resets and rising gold as well as Azure, that kept it up right around that 50% range. So while it's okay to still take those shorts, I just recognize that, hey, I'm likely not to get as much. It was easier when we had these kind of setups where you have the run and you got the dip below the red line, and then your expectation is to touch that low. But when you touch that low and you're not making new dips below the red line, and that's where I expect the build to come through, and that's where I'm looking for those crossovers, particularly of the steel above the cyan already to be in place, and if it can correspond with green at the same time is ideal. This one took a little bit longer, even though the yellow candle did appear at the correct spot. I'd be a little more conservative, and I'd wait until just about the crossover I've already shake out with yellow over magenta. Just becomes a little more helpful. Now, we do have some positive extremes that developed in between that that we would expect on any weakness, significant weakness, would fill back in this particular case. But all in all, good action. I think the ranges are still pretty decent, especially for holiday. It's a little bit slower, which is nice, and just makes it easy to follow a bit broader trends, particularly when we have our 50K chart that gives us a clean and easy viewpoint of where we're at. And it's been fairly consistent with a pretty decent DOC red throughout most of this plateau period, which has just been building. Even though we've passed our new fund money, we don't have any positive dip below the red line right here. It had already been filled on this dip, so none of that's required to be retraced. And while we haven't seen a positive extreme, we're getting close to it right in this adjustment period when I do the recalculation with the contract rollover, and that we'll be all set for that. And that doesn't happen. I won't probably start trading that new contract until the beginning of next week. So wait for that. But as always, I will put up anything significant on the Skype chat. Trade well. We'll talk to you later.